Exclusive insider tips on getting your $5,000 direct payment, guys. Welcome back to the channel. I'm back with some exciting news about a $5,000 direct payment program, a stimulus program, maybe a stimulus check, rebate check related program. Call it whatever you want. This is for people living in Massachusetts, but hey, even if you're not from there, this video could help you out too. With the economy going through some rough times, job cuts, unemployment, and recession, more programs and more opportunities like this one, more stimulus checks, more economic relief programs could definitely be popping up, and I'm going to be making sure to share that with you guys. Kind of like a silver lining in the dark clouds, you know what I mean? But really, you guys got to be careful because some of these programs, they come with some serious strings attached. I mean, just take a look at this one from California.
Let's talk about the new loan program, California Dream for All. Essentially, this is a new loan helping first-time homebuyers look like they have 20% down. So people with minimal down payments are actually able to buy homes with 20% down. While this may be advantageous for a variety of reasons, there's a few downsides you should probably consider. So when you go to actually sell that home, let's say a couple years from now, you're gonna have to pay back that 20% down that they essentially let you borrow. Now, on top of that, they're also gonna ask for a percentage of whatever money you made on the house. So keep that in mind before locking in this new California Dream program for your next home.
So they giveth and they taketh away. But let me know you guys' thoughts on this one. Should the government take a piece of the pie when it's your home? Kind of like, your property that you're selling? I don't think that the government needs to put their grubby little fingers in my assets. I'm just saying. But hit me up in the comments down below. Let me know what you guys think about this. Now, some of the people that I've been talking to, they wouldn't even take $5 million, let alone $5,000 in government stimulus checks or anything from the government ever. They don't even care if they're struggling. They just never depend on the government because there's always a catch. You know what I mean? So yeah, make sure you watch this one to the end for all the details I'm going to be sharing with you guys. Now, we all know that major wealth is built in some areas like the stock market, real estate, business, tech. But the housing market has really taken a hit with investors losing money on homes sold in recent months. Well, I should probably call them traders because investors wouldn't have sold just because there's a temporary housing market downturn. But commercial real estate, they're not doing much better either, with banks preparing for huge losses and ultimate defaults and repossessions, foreclosures on now currently vacant office spaces. Plus, there is something to worry about. Financial institutions will soon have access to what is called FedNow. This is the Federal Reserve's instant payment service, which is set to launch this summer. And so this service will supposedly allow local and community banks to gain access to a new system with instant clearing and settlement, providing safe, I don't know how you define safe, but they're saying safe, secure, and efficient real-time payments. Sounds pretty good, right? But in realities, this could easily just accelerate their plans to push out this brand new digital dollar or central bank digital currency, CBDC, whatever you want to call it, on everybody. So definitely stay tuned, you guys. Also, for the best way to invest in gold or silver, check out the links in the description down below this video. Now, this new rebate program called More EV in Massachusetts, that's going to give you some extra cash if you own or lease a battery operated electric vehicle that's under $55,000. Have you guys heard about this one? So you can get up to $5,000 if you're eligible, kind of like a stimulus check that is literally only to help you to purchase an EV vehicle. But you got to fill out this application and submit it within 90 days of purchasing your car. Starting July 1st, there's going to be some big changes to the program that's going to let you take the rebate amount right off the cost of the car, which is actually kind of cool if you're already looking to buy an EV. Plus, you got low income drivers, they might be able to get an extra $1,500 on top of this base rebate, bringing the total up to $5,000. Now, the only catch is that plug-in hybrids won't qualify for the rebate anymore. And if your vehicle costs more than 80 grand, or if you make more than 150 grand for a married couple or $75,000 for single filers, well, it won't apply to you. You make too much freaking money, according to the government at least. And if you want to buy a used car and use a rebate, it's got to be under $25,000 and at least 2 years old. And you can only get the credit if it's the first sale of the vehicle. So what do y'all think about this? I'm sorry, but if I were to spend $50,000 on a new vehicle, I'm not sure an EV is the way to go. Now, obviously, this is a push to get more people to purchase these EVs, but again, me personally, I'm not really sold. Now, another assistance program that I heard about, the Mississippi FEMA Direct Housing Assistance Program. So officials will provide transportable temporary housing units and other forms of housing to residents that were displaced during the March 24th tornadoes. So roughly 250 survivors in the designated counties of Carroll, Humphreys, Monroe, Montgomery, Panola, and Sharkey, they're currently eligible for direct housing assistance. So FEMA personnel is calling qualified applicants regarding their eligibility and moving forward with the next steps for the temporary housing process. So if you're from any of these places, make sure you do not miss that call, right? And those who already applied for FEMA assistance, they don't need to apply again. The direct housing assistance already has the information, so FEMA will contact the survivor if they're eligible for direct housing assistance. Residents who qualify for direct housing, they could live in the temporary housing units for up to 18 months. And take note, guys, FEMA will not ask you for any money. So lots of scammers out there, lots of scammers in the comments section down below. Watch out for those guys. We do not want to be losing any kind of money. Also, with FEMA Direct Housing, Samaritan's Purse is helping families who are in need through its mobile home replacement program. A lot of mobile homes got destroyed in Fort Myers, Florida during that Hurricane Ian. Anyway, eligible applicants must meet Samaritan's Purse criteria, including that the homeowner must be a resident who owned their mobile home or a single family home that was destroyed by the recent tornadoes and was uninsured or underinsured. Now, of course, I got plenty more news and updates to come in this video and my future videos, so make sure you subscribe to the channel, make sure you got that notification bell turned on, and go ahead and hit that like button. And if you really want to help out the channel, be sure to share this video with a friend. Now, if you want to look up a program in your area, just drop a quick comment down below. I'll see if there's anything out there for you. In one video, I heard about one of you guys that was talking about some relief for people in Ohio, something that they could use to grow some wealth. I don't blame you. Let's go ahead and increase that net worth, shall we? So yeah, we could totally get into more of this in the future. If you guys are up for it, just make sure to let me know in the comments down below. Anything to help speed up our plans for financial freedom, right guys? Now, in case you haven't heard, a US recession is almost certainly coming in the near future, complete with layoffs, foreclosures, repossessions, just like what happened in 2008 for a lot of us. Three scenarios that we're looking at right here. We got the credit crunch, a delayed landing, and a soft landing. All right, so for the credit crunch, here's the deal. There's a 50-50 chance that we might be facing some serious money problems. Yeah, that was actually not a joke, believe it or not. But apparently, if the Federal Reserve raises interest rates 2 or 3 more times, combined with all the banking drama that happened in the United States and Europe, Silicon Valley Bank, Credit Suisse, First Republic Bank, Signature Bank, things could really get pretty tight for borrowing money, like unbelievably tight. And if this happens, then the United States might fall into this nasty recession by the end of 2023. Europe and the UK would definitely feel it even sooner. And so this means that a lot of people might lose their jobs, which, by the way, would definitely be a bummer. And even though China's been doing pretty well after the whole C-19 mess, a recession in the United States could bring everything to a screeching halt. Basically, if we're not careful, this could turn into a global problem. So yeah, we definitely need to keep an eye on this one. Already, economists are predicting that the Fed will likely raise interest rates just 2 days after First Republic failed. Like, seriously? The Fed is not playing. I think the Fed's pissed off. Now, the decision is coming just 2 days after First Republic Bank, the second biggest bank failure in U.S. history. And get this, guys, First Republic Bank, right along with Silicon Valley Bank and Signature Bank, they all failed because of the Fed's year-long rate hiking campaign. As rates went up, these particular banks invested in long-term bonds that lost value, leaving them with billions of dollars in unrealized losses, as they were forced to attempt to liquidate these bonds when many bank account holders came in looking for their cash. And you know what happens when the Fed raises interest rates, right? Well, banks have to raise their savings account rates to attract customers, which could be very tight for mid-sized and regional banks. And so this is why some banks saw depositors pull their cash out of the banks when the banking crisis started back in March. It's a real tough situation all around. And well, we'll just have to see how it plays out. The Fed is hiking interest rates to bring down inflation by making it more expensive for banks and for consumers to borrow money. But it's a really tricky balancing act because they don't necessarily want to cause a recession either. Or at least they say that they don't. So just to give you guys like a historical example, back in the 1970s, back in the 1980s, the Federal Reserve was basically flip-flopping all over the place with their monetary policy, which is a complete disaster for the economy. They couldn't control inflation, nor could they grow the economy. So if we go ahead and fast forward to today, inflation is still more than twice the Fed's 2% target level, so they're focused on bringing it down. But the problem is that the service prices, they're not going down in response to the rate hikes. So these service prices, they're tied to wages, which are up 5.1% from a year ago. So they're a little bit tougher for the Federal Reserve to be able to influence through their rate hikes. Now, if the Federal Reserve thought that recent bank failures were a big problem, they might want to reconsider hiking interest rates. But so far, they haven't said anything like that. Apparently, all these big banks failing isn't enough for the Federal Reserve to change their strategy, but it's definitely shocking and bringing up bad memories of the whole financial crisis back in 2008, isn't it? Kind of feels like 2008 all over again. I'm seeing a lot of businesses and individuals spending less money, and these are the early signs, guys. Now, the next scenario, a delayed landing. About 25% chance here. So let's just say that big banks have some major problems and global central banks decide to hit the pause button on raising interest rates. Even though jobs are still scarce and people are getting paid more, it doesn't help with the fact that prices just keep going up. Now, China comes back from the whole C-19 slump, which is great, but all the stuff that they were making is getting more expensive. And to make matters worse, the central banks have to hike interest rates even higher just to try to get a wrangle on that inflation. This time it might be too much. The US economy takes a big hit and goes into a recession in late 2024. So yeah, basically delaying the inevitable. Last and also the least possibility, a soft dream landing by the Fed. There's about a 20% possibility for this one. And in this scenario, inflation goes down and the Fed doesn't need to fix it. Interest rates top out about 5%, but not too many people are losing their jobs because wages are slowing down too. Now, as for China, their reopening has some good things that are going for it. It's making things cheaper for us, which is nice. The whole situation is confusing though. You got C-19, it's throwing a wrench in things. The job market isn't doing what we thought it would. Who knows, maybe we'll see prices start to drop instead of going up like they usually do. It's definitely a crazy post-pandemic world if you ask me. So we could definitely see something totally out of the expectations as well. Who knows? And that's why it pays to tune into the latest updates. Make sure you guys are always in the know. Be sure to hit the subscribe button, drop a like for the video. I really appreciate that. So anyway, thank you guys for watching this video on some new stimulus programs and the possibility of a recession in the United States. It's important to stay informed about the economy, the economic situation, and to be prepared for any kind of potential impacts on our finances. So remember, stimulus programs can provide temporary relief for those who are struggling financially, but they may not be long-term solutions. So it's important to always focus on building your financial resilience and your stability. As we navigate uncertain economic times, make sure to stay informed, be proactive, and stay hopeful. Appreciate you guys watching. Be safe, and I'm gonna see you on the next one.